Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, stock market analysis show, where we look at what happened in the market during the day and how we can plan for a better trade for the next day, right? And what kind of day we had? It was weak. Yesterday was bullish, today was bearish. It's a weak market, weak and volatile, right? And overall it's consolidation that's happening. And remember, tomorrow we have an expiry. That's a monthly April month expiry that's going to happen. So without wasting time, let's get to and see the pre-market analysis. And this is for April 28th, Thursday expiry day. Tomorrow 2022 monthly expiry, and that's based on all the parameters that you see on the screen. We also have some actionables, right? And also we'll have a wrap-up view of the market as per what I see, right? So Nifty, look at the charts on the left and Banknifty charts on the right. That's a daily chart that you see. It's a bearish candle. You can see that's a small body. Small body means there is big fight between bull and bear that happened, right? That's what it indicates. It's even more for the case of Banknifty. It's almost kind of a doji, you can say, in the Banknifty. So that's a small body, indecisiveness, big bull bear fight. No, you don't know whether it will go. So basically what happens is it's facing resistance, and gap down today. Right? Yesterday it gapped up and then gave clear bullish indication, but today it's gapped down. That means there's clear sellers up there, who are waiting to sell off the stocks, right? So another view. So 52 MA was conquered today by Nifty and the Banknifty, but today you can see that it has failed to sustain there and then fallen back to hitting the resistance. Remember that we're still below the 220 and 100 and all that, so we're fallen below that. So it's a bearish bias. So let's see the numbers. Like, so almost 1%, 162 points on the Nifty, and almost 1%, 376 points lost from the Banknifty. And we have closed about 17k, right? So, but it's a very small indecisive body that has happened. But it's almost like a doji in the Banknifty, even more smaller. But we are at a resistance below the 20 and 200 EMA, which are crucial. And we are going to the 50, which we had conquered yesterday. And overall, it's a trend line break, trend line sliding downside channel, which was attempted by a flank breakout, which did not sustain, and it has fallen back in the channel, right? That's what you see in Nifty and the Banknifty both. Intraday price action, you can see that it was a gap down today. Yesterday it was a gap up. Today it's a gap down, right? So look at the volatility. We had a gap down, then a V-shaped recovery back. Same V-shaped recovery. That means people went short, got trapped somewhere near to 70,000, and then when the market reversed upside, right? So that's a V-shaped recovery. So gap down was how much? Gap down was around 0.70 in both indices. And after that, double of that, further it went down, and then it reversed in V-shape and recovered how much it fall from the opening. So that is what happened today. Bollinger Bands are showing that it is consolidation clearly, with the bands moving sideways on both indices, but it is a bearish bias because the price is far below the 20-day MA, which is crucial median of the Bollinger Band. So volatility is always there, right? It's not. You can also see there is some expansion that's happening on the bands on both sides of the Nifty. Banknifty is not that much, so that's why you see huge volatility in the markets today. While overall, the bird's eye view, what it's doing, nothing but we're still at the same place, right? We are still at the same place since very long time, right? We are just consolidating is what is happening, but due to the volatility, we feel that big moves and big down moves and all happening, but basically we are consolidating. That's what Bollinger Bands are saying. Let's quickly look at the support resistance levels. Yeah, so 17,000 and 17,050 is kind of resistance zone. It's not fully converted. It's just managed to climb over that. That's all. And above that you have 17,200, 17,300, then 17,350, 17,400, and then 17,500 to 17,650 Fibonacci into the retracement level. Above that 17,800 to 17,850. So that's the resistance to the upside of the Nifty. Downside, there is some clarity on the charts. Let us directly go in there and look at what do they say. Nifty, we have seen that resistance is upside. We had seen 7,800, 7,500, 600, then 17,400 level, then 7,200 and 17,000, where it is hovering around right now. So If that's cleared on downside, you have 17,800 and 89, 16,800 and 16,900 Fibonacci 38 retracement, which is good support. Below that, 16,700, 750, 16,650, 550 that level, 16,350, 450 the last one, Fibonacci 30 retracement levels. Anything below that, you have to be cautious. It could be bearishness. And Banknifty levels, if you see, you can see that there is, right now it is at a marks and it should a support zone of 35,600 to 35,900, that zone, and then bounced up and resisting at 36,300 to 36,800 Fibonacci 30 retracement levels, and above that you have 36,900 to 37,100 kind of levels. That's a gap resistance it has to overcome. Then if it is closing about 37,500 Fibonacci 23, then it has conquered the gap, and then you can see even more bullishness. 37,700, 37,800 resistance, above that 38,000, then 38,500. That's crucial to close above the 39,400 levels, which is the previous swing high which was formed recently, right? If that's overcome, then we can say it's clear bullishness. So if those 34,600 supports, no, the supports downside is 35,600, 900 levels, then 35,000, 35,300 Fibonacci retracement levels, then 34,350, 750 that zone, and then 34,100 Fibonacci 61 retracement levels, which is also having a gap support. So that's the resistance supports that you can see. So key levels to watch out from the Banknifty is 34,000 on the downside and 38,500 first, and then 39,400. These two levels are crucial for on the upside. Similarly, Banknifty first would be 17,800, then 17,850, then 18,000 and 18,350. Right, these are all upside resistances that has to be clear. Downside, if it breaks the 16,900 Fibonacci retracement level, then it's a problem. We'll watch out for that. Then 16,400 which is losing, then we have a bigger problem. Right? After that, we have even more bigger problems, right? But basically, those important strike points is what I mentioned. Let's get back to slides and then quickly move to the next things. Right, momentum. If you see, momentum is sideways and continues to be sideways, doing a zigzag. That is what is happening. You can see that that price momentum is zigzagging in my Nifty and the Nifty sideways momentum. This is in daily charts that you're seeing, but the medium charts, the medium term also, the momentum is just sideways. Right? Trend is bearish in both the medium term and short term. Trend is remained bearish based on the ADX indicator. DMI and LT zones is where it is. And it is having flat strength on both the indices, Nifty on the left side. So it's bearish trend on medium term and short term on both the indices, Nifty and Banknifty. Right, with flat or weak strength, you can say. So it's when it is consolidating, the trend will be bearish or bullish, but it will not be having enough strength. That's exactly what is happening. So a bearish trend with flat, a bearish trend with flat moves, flat strength, and sideways momentum, and bearish price pattern is what you see. Volatility, what happened today? It's again spiked. Yesterday it's cool of 7% or 9% or something. Today it's spiked back 7% up, and now it's about 20. The danger zone 20.60 is what the India Wix is saying. Implied volatility of the Nifty is 20.28, spiked up. Implied volatility percentile is 80.8, spiked up from far 60 levels, few weeks back. So VIX is closing up above 20. You have to be careful. Open interest. This level has to be carefully studied because tomorrow is an expiry. Yeah, this is the closest clues that you can get from the option writers on the put side and the call side. Right. So you can see that a lot of calls have gotten added up today, and because it's tomorrow is expiry, and then you have some unwinding of the puts also that has happened. So overall, there is some bearishness in the Nifty that you can clearly visible on the OI side, and here also very large call writing has happened right near to the ATM levels, and call additions, new call change in today's change in open interest is what you see. And also you can see that there is some unwinding of the puts also that has happened. So overall some bearishness can be seen. But put call ratio is saying that it is not bullish, not bearish either. It is closer to bullishness probably. Right, 0.76 on Nifty, 0.69 on Banknifty. And clearly futures open interest data is showing it's a short build up that happened today. Options open interest data says that the levels for the Nifty for the maximum put and call writing is at 17,000 and 70,500 close range. Right, so So the option riders are expecting the market to be consolidated and then not give up the 17,000 probably, right? But if the second level of highest put and call rating can be seen at 16,400 and 17,300, that is also not a very wide range. So it's going to be volatile, narrow range move that can be expected tomorrow. Right? So correlate these levels with the chart levels that we studied, and that's where you have to place the bet. Banknifty 36,000 and 36,500 again narrow range where you see the highest put and call rating. Then 35,000, 38,000 is second level where the highest put and call rating, second highest put of call rating, and so right. So that's about the open interest analysis. Overall variation is the narrow range is what is expected where the highest put contracts are written, right? And PCR also is not giving a clear move but more towards the bull sides and not likely to break down big is what it says, but futures open interest says that it was a bearish build-up that has happened today. So that's it. Today clearly you can see that the ICICI Bank also it came up for some reason big, the heavyweights, all of them are flat or hardly doing anything except TCS showing mild green. So auto is the only sector that performed today. All other sectors, financial services, FMCG, IT, major all sectors did not perform. Even metals and pharma also did not. So index heavyweights, if you see, HDFC is showing some green. It seems to be consolidating at the zone and then climbing back this momentum, the sideways momentum. And it is, it takes a long way to go back to where it is. Right? HDFC Bank is what we saw, and HDFC also seems to be showing some green. And it has already climbed back the momentum of the sideways on bearishness, and then it's already it is in a trendline channel downside. You have to watch out whether it's breaking out of the channel or not. But you have a resistance above immediate. Coming to Reliance, that's only sector that's performing. We have a green close today, and it is a flag breakout after a small retracement few days back. Umbrella has taken the support of RSI 60 and then taken a bounce, so good going there. Infi seems to continue to be weak. There's a big resistance, gap resistance that is there, which has to be overcome today. Also, it is a close with the momentum in the bearish zones and the price action also, so it's the same. So stay out of Infi. TCS also is on the edge of a trendline channel, which is almost about to break, and downside we have a very long resistance where it may fall and consolidate probably. But momentum has recovered from the bearishness overall, you can see the RSI. ICICI Bank is also showing some weakness after it had hit another previous resistance zone yesterday, and it seems like last 2-3 it was consolidating fallen back to the support zone from where it had taken a good bounce up, right? Probably it may hold the support or it may break down. That's what we have to watch. If it is consolidating, it may form a couple of candles near to that, the same above this support zone where it has taken support and then gradually climb up upwards, right? So you have to close watch. Remember that the bullishness is gone. Like momentum is dipped in the sideways. So that also you have to watch whether it will be able to climb back the bullishness. Climb back to the bullish zones of RSI 60 above kind of levels, right? Kodak Bank likes consolidation and it is still consolidated. It is a green close today, but it is very close to the support zone where it has spent long time. Momentum is in the sideways, not in the bearishness, and it has always remained in the sideways, even a small dips long time back and immediately climbed back. So it's a long consolidation that is happening in the Kodak, I would have seen. So overall, you can see that banks are weak, HDFC Twins are weak. When IT was weak, and only sector with only heavyweight that's performing is Reliance. Sectoral performance, if we look industrial different sectors performance, you can see more or it was like kind of down day, right? IT nearly 0.77 down, metal flat, down 0.25, auto down, pharma down, FMC down, reality down all half percent, right? So overall the only bullishness is still seen in auto, right? The only sector that performed is auto. IT is bearish zones, metal, pharma, FMC, reality all out. The sideways not at gone into the bearish zone. So it may be auto bullish bets can be made, but with cautious stops because medium term is still bearish, still sideways, not at bullish. So auto may continue to consolidate above the RSI 60, means it may be giving some potential for a long swing trades or something, right? You can try that with cautious stop losses, right? That's how the sectors are performing. Institutional participation data is not coming as of yesterday. It's FIs are continued selling, DIs are continued to buying, but FI selling is sometimes very aggressive. Last week it was very aggressive. Let's quickly check if the data has come in. Today's data must be also good selling from the FIs. No, data is not coming. Let's go back to the slides. We'll have to check that later, but definitely it's an FI selling that might happen today also. Going back to the US dollar, USD INR currency pair, you can see that the momentum has picked up in the, in the charts, and then rupee had gained slightly because of the red candle formation today, but overall rupee is very high levels of 76.5 above. So looking at the dollar index also, dollar is shooting up like anything, and then almost very close to the 103 kind of level, which is a major resistance zone where it may take some resistance, but it's gone up too far, and because the momentum it's rising, straight up, shooting up, right? So rupee is weakening, and it is very very weak level with dollar at a very the currency pair is at a level which is very close to the all-time high level, so it's not good, right? Worrisome. And on top of that, now look at this Dow Jones charts on the US market charts is what you see here. It is fallen to the bearishness today, and you can see a big bearish on the edge of falling from this trend line, as well as from the major support zone where it is. So tomorrow, today night's trading will be decisive. Tomorrow, if it's giving up, this means most likely there could be big continuation of the bearishness that can be seen, which would impact our markets as well. So we have to keep a close watch. Same thing has happened on the other major US market indices, the S&P 500, Nasdaq. You can see that it has taken a support. Now the next in today's trade is what you have to see, whether it's consolidating here or it's just making another big red down, breaking the resistance zone or support zone or not, right? Even S&P 500 also is at this blue line is a support zone that is also breached now already. Now, no, it doesn't have any support immediate until this levels, which is quite far. So if that major support where it was touched upon, it was tested many times, it is given up that, so it increases chances of overall bearishness. So all three major indexes, you have to watch whether it's going to consolidate at the current support zone or going to give up it for for the next day. So if that happens, then we have worry, our markets have worry. Crude oil is again shooting up, climbed above the 100 once again. So it does not plan to go back to the support zones of 60-70 levels, nowhere in the near future, I think. But fundamentally, it's cooled off. The momentum is cooled off slightly. It's in the sideways, and it may be consolidating at a relatively lower level compared to the 13-year high where we had hit several weeks back. Gold also seems to have given up the second attempt of moving up and then trying to consolidate at the support zone. Momentum is at a support. Whether it's yesterday, it was almost breaking into the bearish zone also. So gold doesn't want to go down, so it's waiting cautiously at the support zone from where it had made two attempted breakout that failed. Actionables 2, Hero MotoCorp is giving a good inside outside bar. So this pattern is at the Bollinger Bands. You can see the price is moved. This is a volatility divergence is what you call. The price is moved outside the band and then formed a W pattern with another leg of the W that is inside the band, and then it is shot up. So now there is every potential that it can move further up, and remember that there is resistance on here, but at least till there it can go there. So that itself will give you a good trade for the swing trades. But after that, you'll have to trail. So Hero MotoCorp, momentum is already in the bullish zones, trend is bullish zones. Volatility divergence on the Bollinger Bands. That's the reason for the pick. Reliance Industries had done a retracement and then broken down. So definitely it is heading high. There may be retracements like we had seen the last time. So it's tight stop losses for swing trades and stop losses near to the breakout zones for the positional trades. What you have to do? The momentum is still in the bullish zones, above 60, and the patterns are beautiful. Cup and handle breakout and flank breakout that has happened. So definitely it can go much higher, but since it has run substantially to a higher level, there could be small retracement also. profit bookings, that may come in. So to be cautious on that. But those are very few stocks in the entire Nifty 15 hours bullish. And Reliance is one among that. It continues to be doing that even when the market is falling. So basically, Reliance is holding the market kind of. So auto sector is also performing. So it had a very good bullish wide range candle also today. And Bollinger Band is expanding on the upside and the price is moving and walking on the band. So it's clear bullishness there. So Hero Motor Corp could give good, then Reliance could give good swing trades potentially. I have tight stop losses because the market all around is consolidation. So it may be zigzag moves and we have to be careful. Wrap up mild bearishness with a neutral view with a mild bearish bias, is what my view is. It's the same exactly what I thought. All the points put in there is exactly the same. Nothing has changed because market is consolidating, moving up and then moving down. Either one day move up, next day move down, then again move up. Same intraday also, half day it will move up and then half day it will move down. So that's what's happening. So the view does not even change. It's a neutral view with a bearish bias. Reasons are the same: the bearish trend, sideways momentum, sideways movement in the Bollinger Bands, support resistance level, the bearish price patterns that we have seen, all of this, right? Despite the fact that 15-20% recovery happened, then breakout also happened, beautiful. It could not sustain, then fall back. Now the retracement is slightly more than expected downside. So is it going to break down and give up everything, or is it over now? Right? It's a close watch that you to do. The thing is, the uncertainty is still there. Uncertainty in the terms of Fed inflation, and on top of that, war is also still there. So the levels that we have discussed earlier, 1850s, 39,500, 39,400 levels, and then 17,500, 37,500. These levels is what you have to keep in mind for any up moves on. And the down moves similarly 34,000 and 16,400 is what we had a close watch. So volatility is climbed above 20. If you don't trade, that's the best trade that you can do, unless you are a professional. And if you're trading, also have tight stop losses and do not carry forward any open positions, or especially in the derivative options, without having fully hedged positions, or no matter what the strategy is, directional, control spread, vertical spread, whatever it is, have risk defined so that your capital is left and next day when you come in the table, right? So positive factors are less, uncertainty is there, right? The positive factor is there, the retail participation, the confidence in the market, the mutual fund buying and all this, makes the market come back, in a matter of 1 or 2 weeks, 15-20% comes back and just like that. So even if it falls, it's going to buy on dip market is what it looks like, right? FI selling is a problem, and the uncertainty all around the global cues is what the problem right now it's happening. So the view is mild bearish with sideways price movement that is expected, and if that helps you to frame your view, definitely think of liking, sharing, putting your comments, and then sharing to maximum. If you're not subscribed, definitely subscribe because it helps us a lot to keep ourselves motivated to keep doing this every day. Thanks a lot for watching. Happy trading, happy learning, happy investing. Bye.